like I said, there are three main charts that I'm going to get through, and it's in this lesson. So it's going to be candlestick chart, line chart, and bar chart. Now, like I said, a chart in Forex is a price chart that shows the historical price and volume data of your currencies, commodities, all your securities, right? It graphically depicts the historical behavior of a currency, for example, across several time frames. Remember, I showed you there's so many time frames. Technical patterns, I showed you some of the many, well, a few of the many technical patterns there are. And then indicators, right? I haven't showed you any indicators because I don't really use indicators, but you get indicators like EMAs, SMAs, Bollinger Bands, MACDs, RSI. There's so many in Ichimoku, there's so many indicators, to choose from, and then much more. First tool that every technical trader uses. Okay, your chart is your first major tool. Shows the trading activity that takes place during a single trading period on all time frames. Like I said, there's three main charts: candlestick, line, and bar. Okay. Now, charts are very user friendly, okay, because it's easy to understand, okay, and it's very visual. It's pleasing to the eye when you are looking at a chart. Depends though, depends what you have on that chart as well. The y-axis, okay, which is your vertical axis, on the chart indicates the price scale. So it's the one on the side, on the right hand side. Your x-axis, okay, which is your horizontal axis, the one at the bottom, will indicate the time scale. The most recent price is plotted furthest to the right. So this is an image of a candlestick chart. As you can see, the price scale is on your right. You can see the price is increasing from as far as you can see on the chart. It's 1.10500, and it goes up all the way up until 1.17000. Okay, that is your y-axis. That is your price scale. Then your time scale, your x-axis, is at the bottom. So it shows you November, December, depending on what type of time frame you're on. So obviously, on a 1 hour time frame, you'll see, 3, 4, 5, 6 o'clock, or whatever the case might be. And then your recent price, as you can see, it's in red there. So at that given time, the recent price for this pair was 1.12850. Okay, and that is the last candle. You'll see, okay, obviously you can't see it now because this is a screenshot, but that is the last candle, and it would be fluctuating depending on what time frame it is. It will fluctuate until that sort of time is over, and then a new candle will open. So if it's an hour time frame, that candle will fluctuate up and down for a whole hour. Once that, let's say 7 o'clock, once that whole hour is done and it hits 8 o'clock, that candle will close and then a new candle will open. Right, so that's basically how that operates. In the olden days, okay, there was no technical charts. Let's face it, there was no technology. Now I'm talking before technology, right? Your charts were drawn by hand. Now, thank goodness for these two men, Bill Gates, Microsoft owner, and Steve Jobs, who made computers accessible to everyone, right? Therefore, charts are now drawn by software. On your Apple, thank you Steve Jobs. On your Windows, thank you Bill Gates, right? A chart aggregates all the buy and sell transactions of that specific security at a given time. Charts blend all activity from every participant, human or not. So even, you get robots, you get systems, basically AIs that also place trades. Doesn't matter if the trade was executed by a retail trader, such as yourself or myself, a central bank, hedge fund, AI, etc. All the information is then blended together of all of us traders, should I say, okay, in a visual format that a technical trader can study and analyze, which means the chart. Now, this is the first one. This is the candlestick chart. So, most commonly used. Okay, like I said, majority of traders use the candlestick chart, but why? Okay, the bar chart and the candlestick chart are very similar because they both show the open, the high, the close, and the low of price. Okay, it's just that the visualization of the candlestick chart is much better and much more pleasing to the eye than your bar chart. Easiest chart to read, like I said, shows you open, close, high, and low of price, but the visual is better. Helps visualize bullish or bearish sentiment by displaying the candlestick bodies using different colors. So, like a green candle will represent a bullish candle, meaning price is increasing. So, if you look at the candle, you know that the price increased. A red candle displays, a bearish sentiment where price will decrease. So that's nice about the candlestick chart. More clear, more visual, pleasing to the eye, complements most technical analysts' techniques. Okay, majority look at candlestick patterns, etc. So candlesticks are the one to choose. However, not to say that there isn't any successful people that use line charts and bar charts and every other chart. Only problem with the candlestick chart is that it will lead amateurs to thinking that oh, I see a bullish candle now, price is bullish, let me buy. Unfortunately, not. Doesn't mean that it will move into that same direction. Also, another thing is depending on you. Okay, you may clutter your chart when you have a candlestick chart with other sort of things. Or if you go on a very small time frame, it looks like candlesticks everywhere. So might confuse you. So here's a little history on candlesticks. Most effective way to read price action, right? Developed over the centuries in Eastern Asia. Originally used in Japan during what was called the Edo period. This was from 1603 up until 1868. And this was to monitor and forecast Japan's most prized possession, most prized commodity, right? Not gold, not silver, yes, rice. Okay, that was their most prized commodity, probably still is. Which then was, some things are traded on this, other stock markets like JSE and whatever. This was traded on a rice exchange called the Jima Rice Exchange. Now, how did we get hold of the charts? It was thanks to one person, and his name was Stephen Neeson. He basically brought candlesticks from Japan to the westernized world, and you can look at it in his popular book. It was called Japanese, well, it is called Japanese Candlestick Charts and Techniques, okay, which he developed in 1991. And he learned this sort of candlestick chart and these candlestick patterns from a Japanese broker in Japan, and then like I said, he brought it to us and shared his knowledge, and that's how we know it today. It's a way of communicating information about the price movement, communicating when price opened, when price closed, what was the highest prices been for the day, what was the lowest prices been for the day, how long is price going to be increasing, how long is price decreasing. So it is a form of communication. One candlestick represents trading in that specific time frame. Like I said, if you're on a daily time frame, then one candlestick will represent that whole entire day. So that candlestick will fluctuate up until 12 a.m. That candle will close, a new candle will open. If you're on the 1 hour time frame, let's say at 6 o'clock, that candle will fluctuate up until the point that time hits at 7 o'clock. Then that candle will close and a new candle will open. Okay, that is candlesticks. I'm going to go in more detail in candlesticks a bit later on, but we're on the type of chart right now. So second one is bar chart. Like I said, it's not the best. It's actually the least used, and it is more complicated than candlesticks. Yes, even though it shows the open, the high, the low, the close, just like a candlestick. However, it doesn't have a body. It doesn't have a real body like a candlestick. So it's harder to visualize it. It is harder to see where price will be going unless you've practiced. Um, so it does help, a trader see the price range of each period, and can either increase or decrease in size depending on the different bars. Now, as the price fluctuates, if the volatility in the market increases, okay, then obviously the bar will be bigger, right? It's just common sense. If it decreases, the bar will become smaller. Okay, I'll show you the candlestick anatomy, right? Don't worry about that. So this is basically the anatomy of the bar chart. Like I said, I will show you the anatomy of a candlestick in another lesson. So as you can see, the open is on the left side of a bar chart, the close is on the right side, the low, the high. This is exactly how a bar chart looks. I'll get into that now. And because I'm not gonna show you candlesticks right now, there is a lesson, specifically on candlesticks. So I'll dive into candlesticks in that lesson. However, I'll go on the chart now and show you how the bar chart looks, and then how the line chart looks, etc. But so the opening, for example, that's the little horizontal line on the left. Okay, that's where price opened. The high, okay, the top of the vertical line defines the highest price of the period. So if this is a daily candle, that is the highest that the price has been throughout the day. Same with the low, that's the bottom of the vertical line. Okay, the vertical line is the straight line, and that shows the lowest that price has been through that certain time frame. So if it's the 1 hour time frame, that has been the lowest within the hour. The close is the little horizontal line on the right side. So if now the left side is open, the right side is closed. If when we get in, you'll understand this when we get into the candlestick section, when I show you the anatomy of a candlestick, where for a bullish candle, meaning price to increase, the opening is always at the bottom, the close is on top. Then when price decreases, the opening is always on the top, close is always at the bottom. Okay, same sort of concept here. So basically, your open, if your open is at the bottom, okay, your left side, remember, your left side is always, if that's the bottom, then the close is on the top, on the right side, then that is a bullish move. So price is increasing. Okay, and then if the left side is higher and the right side is lower, then that means that it is a bearish candle, well, bearish movement, sorry, not bearish candle. So price has been decreasing. All right, so this is basically how the bar chart looks on the actual chart. Thankfully, tradingview.com has represented it with color, so you can easily tell that's a bearish, that's a bullish, etc. But as you can see, this bullish candle, the opening is on the left side, okay, close is on the right, bottom side, top side. So with the bearish candle, the opening, right, is above, and the close is below. So the open is always on the left side. Now it just depends on, is it above or is it below? If the open is above, just like the candlesticks, I mean, if I go to candlesticks, as you can see, this is bearish. It opens there, closes there. Bullish opens here, closes there. So that's basically the bar chart. Alright, next one and final one is the line chart. Now, your line chart looks the most simplest, okay? However, it only shows you the closing of price, an average of the closing. Doesn't show you the open, doesn't show you the high, doesn't show you the low, right? Only the closing. Now, simple to follow, but doesn't provide you detail. But doesn't provide you detail, okay? It helps you see trends more easily and visually. No anatomy because I mean it's just a line, so and it's just a closing price, so there's no anatomy for it. So this is your line chart. So much, simple to read. However, like I said, it only gives you the closing price, but I mean, it's good for, let's say you wanted to put your trend line there. It will help you identify that it's an uptrend. Here's a downtrend. Lower low, low high, lower low, lower high, higher low, low high, lower low, etc. So nice to use as well. So you don't have to use just one. I mean, you can, just to identify trends and stuff, use the line chart and then go back to the candlesticks. Just depends on you. Just depends what works for you. However, I just basically just use candlesticks myself. And those are the three main charts.